Welcome to this explainer. Today, we're unpacking, wait for it, the absolutely massive, multi-trillion-dollar wave of cash pouring into artificial intelligence right now. I mean, you've probably wondered, right? Why are some people seemingly making fortunes almost overnight while others are screaming from the rooftops that a massive market crash is basically right around the corner? Well, today, we're going to look at the cold, hard data to figure out if this is the greatest investment opportunity of our generation or potentially the biggest financial bubble we've ever seen.
Okay, so let's just dive right in. We're going to explore these honestly eye-watering investments happening right now. And we're going to impartially weigh the real mathematical risks of a market crash against the very concrete technological leaps happening behind the scenes. Because right now, companies are spending money like there's literally no tomorrow. So to figure out where this whole thing is heading, we've got to follow the cash. You know, when most of us hear the word AI, we immediately think of the surface-level stuff. The chatbots drafting our emails, the tools generating those weird, funny images, or the smart assistants on our phones. But beneath all those sleek interfaces is what we can call the hidden engine. And we're talking about an enormously expensive, massive physical infrastructure here. Imagine highly advanced supercomputers, thousands of miles of fiber optic cables, and sprawling data centers that literally require power systems rivaling the energy consumption of a small city. Every single time you ask a chatbot a simple question, huge amounts of computing power light up in the background. Multiply that by billions of requests every single day, and yeah, it makes total sense why tech giants are dropping hundreds of billions of dollars just to build the basic plumbing for this new era.
Section 1. History Rhymes. The Gold Rush.
To really wrap our heads around this massive infrastructure spend, we actually need to rewind all the way back to the year 1849, the California Gold Rush. Thousands of people rushed out west, leaving literally everything behind, totally convinced they were going to strike it rich, panning in the rivers and mountains. But the harsh reality of that era, most of them completely failed. They went home empty-handed and probably really regretted quitting their reliable day jobs.
But here's the fascinating part. The real fortunes back in 1849, they weren't made by those highly optimistic gold miners. No, they were made through what's called the picks and shovels strategy. The merchants who sold the underlying tools, the shovels, the pickaxes, the sturdy denim jeans, the daily supplies, they profited by providing the essential infrastructure that an entire booming industry desperately needed, rather than betting on the wildly unpredictable chance of actually finding gold. And that exact historical principle is totally repeating itself in the tech world today.
Except, today's shovel sellers look a little bit different. The modern gold rush isn't happening in muddy rivers, it's playing out in heavily air-conditioned data centers and cutting-edge semiconductor factories. While everyone else is busy trying to guess which flashy AI app is going to be the next big hit, the real winners might just be the companies quietly manufacturing the silicon chips and the servers that literally make AI possible in the first place. Which is exactly why the valuations of those foundational infrastructure companies have absolutely exploded lately.
Section 2. Warning signs of a bubble.
Now, hold on a second, because not everyone is convinced this has a happy ending. Some of the smartest investors out there are asking a pretty uncomfortable question. What if pure hype has pushed prices way, way beyond what these businesses are actually worth in reality? I mean, we've seen this exact pattern before, right? Think back to the late 1990s dot-com boom. Investors got completely obsessed with anything even remotely related to the internet. Valuations for companies with zero profits and sometimes literally no products just exploded overnight. And then the market violently crashed, wiping out billions of dollars. Now, the crucial thing to remember here is that the internet did absolutely change the world, and a handful of survivors became the massive tech giants we know today. But the financial collapse itself, it was devastating if you were caught holding the bag.
And that brings us right back to today. Experts are pointing out 5 major warning signs that suggest we might be wandering into dangerous territory again. Number 1, stock prices are rising way faster than actual company earnings, kind of disconnecting from economic reality. 2, we're seeing staggering corporate spending on experimental AI projects that might take decades to turn a meaningful profit. 3, everyday retail investors are jumping in entirely because of FOMO, the terrifying fear of missing out. 4, recent stock market gains are heavily concentrated in just a tiny top-heavy handful of mega companies. And 5, maybe the most dangerous psychological sign of all, this creeping "it only goes up" mentality.
There's actually this famous saying in the investing world, whenever investors stop considering risk, history tells us trouble may be ahead. A bubble basically happens when people ignore the hard facts and start investing entirely on emotion, hype, and momentum. When everyone universally assumes prices will just inevitably keep climbing forever, that is exactly when the risk of a severe, sudden market correction shoots up dramatically.
Section 3. The counter-argument. Real revenue. But hey, before we assume a massive crash is totally guaranteed, we absolutely have to look at the other side of the story. Because today's AI leaders actually look fundamentally different from those fragile internet startups of the 90s. We're seeing accelerating adoption across huge global sectors. Unlike the dot-com era, today's leading AI businesses are already raking in enormous revenues. They have actual paying customers and are seeing real billion-dollar profits. And more than that, these products are being integrated rapidly into healthcare, high finance, education, massive manufacturing plants, and even transportation grids. These aren't just unproven ideas scribbled on a whiteboard anymore. They're deeply embedded tools that millions of people use every single day to save time and make money.
Because of this, governments, huge multinational corporations, and everyday consumers are all investing heavily in adopting this stuff at record speed. Why? Because top analysts don't see this as just some passing cultural trend. They see it as a foundational technology that could eventually transform basically every industry on Earth. If they're right, we aren't standing at the fragile peak of a bubble, we're literally just in the very early innings of a massive multi-decade global shift.
Section 4. The modern shovel sellers.
So if we are in the early innings, how are experts actually navigating this tremendous uncertainty? Well, instead of trying to guess which highly competitive AI software company is going to win out, smart investors are going right back to that 1849 strategy. Who supplies the tools? Because the essential tools for AI are universal. Regardless of which specific AI software dominates the market in 10 years, every single one of them desperately needs cutting-edge chips, endless rows of servers, huge amounts of electricity, and advanced networking equipment just to survive. The companies providing those raw essentials stand to benefit big time, no matter who actually wins the consumer software race.
Section 5. 3 possible futures.
All right, let's map out how this massive boom could actually play out in the real world. We're essentially looking at 3 distinct possibilities here. Scenario 1. AI adoption accelerates even faster than expected. Companies unlock incredible new efficiencies, generate massive profits, and the overall market safely keeps climbing. Scenario 2. Investors get a little too optimistic in the short term, leading to a sharp but temporary stock fall. Basically a reality check, but the underlying tech revolution just keeps on rolling. Or Scenario 3. A historic bubble forms and completely bursts. Valuations collapse, thousands of companies fail entirely, and only the absolute strongest, most resilient businesses survive the fallout. Now, here's a super fascinating point about the historical disconnect between tech progress and market reality. The internet survived the dot-com crash to connect the entire globe. Electricity survived brutal financial panics in the early 20th century to power our modern lives. Railroads survived devastating market collapses in the 1800s to build modern commerce. Ironically, in all 3 of the scenarios we just talked about, the technology itself still ultimately changes the world. The innovation almost always wins out, even when early, overly eager investors lose their shirts. Which brings us to a really vital, undeniable lesson here. The biggest mistake in modern history wasn't necessarily buying into a bubble. It was completely ignoring the foundational technologies that ultimately transformed human civilization. Whether you're an ambitious investor, an entrepreneur trying to build a business, or really just someone curious about where the world is heading, the one thing you absolutely cannot afford to do is stubbornly ignore this transformation. AI might become our greatest opportunity or our most painful financial bubble, but the race to build the future, it has undeniably begun. So as this technological acceleration continues at just a breakneck pace, I'm going to leave you with this final thought to ponder. Are we currently watching the birth of the next great economic era, or is this simply the very beginning of the next great market crash? Nobody knows for absolutely sure, but the eventual outcome is undoubtedly going to define the entire next decade. Thanks for joining me on this explainer. Let me know what you think and keep questioning the data.